Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Almasri. Cory Froc has been an active investor since 2006, focusing on residential conversions, but he recently got into larger developments. This is the second major real estate cycle that he's been through as an investor. The 2008 financial crisis helped solidify his portfolio and sharpen his skills as an investor, and the latest shift is what he believes a new learning experience for a lot of people. In this episode, we discuss his journey in 2006, buying bad properties in bad neighborhoods, duplex conversions and garden suites, the ups and downs of a sixplex development he's working on, and his path as a real estate investment coach. Hope you guys will enjoy the content. Make sure to share this with a friend or family member that'll benefit from listening to it. And if you're interested in learning about some off-market multi-unit opportunities, we've got a couple in the Niagara region, so you can feel free to contact me on Instagram at welloffx or by visiting welloff.ca. Happy to discuss the opportunities that we have. There you go. Enjoy the episode. This episode was brought to you by Mortgage Dawn with Go Pineapple. All right, I'm here with Cory. Thank you for joining me today.
And thank you for having me.
Yeah, I like to start off by asking about your childhood. So tell me about where you grew up, a couple things you remember.
Yeah, absolutely. So I'm a Western Canadian kid. I grew up outside of Edmonton. Basically kind of a bit of a rough and tumble hockey family. So I lived out in Edmonton until I was about 30 years old, and then I got moved through the corporate world into Toronto, downtown here.
Okay. What'd you do in the corporate world?
I was in sales, mostly in food manufacturing. So a bunch of different, the major, people will hear of H.J. Heinz and Kraft and companies like that in the food business. Mm-hmm. So, yeah.
All right. How did you get into the crazy world of real estate? I know you were talking about 2006 being a big year for you.
Yeah.
So let's go through that.
Yeah, absolutely. I was in the corporate world, and as well as I was doing, I still realized there wasn't much left at the end of the day. I was recently out of a divorce, and after paying all the bills and the child support and all that, which is all great, but it didn't leave a lot at the end of the day. So back in 2005, I started doing some research on other methods where I could kind of do either a side income or something else to kind of grow my wealth, and came into real estate and started learning about it a little bit. And then I dove headfirst into the real estate game and started buying properties. It's funny. I know we talked about it a little bit just prior to the show about I relate 2006 really to like 2019, 2020, where, there was a lot of people talking about the benefits of real estate and always on the upside and huge, you just buy a little down as you can and it'll cash flow. And it worked very well for me for about 2 years. Mm-hmm. And then it went sideways. Back then it was the financial crisis, which different fundamentals than the economic shift from today, but very similar result. So the interest rate wasn't quite as high, but vacancy rate was higher, and there was a lot of struggles. So it took me a long time from 2000 and I'll say 10 to 2015 to sort of recover from that.
So was this in Edmonton that you were investing?
No, I actually invested out here, focused primarily in London, Ontario.
Oh, really?
Yeah, absolutely.
So London was hit with 2008, I guess, crisis?
It got hit slightly. I know actually quite a few people that invested in London during the same period that did all right. Mm-hmm. But I made basically every rookie mistake you could make. Like I was looking for the cheapest house in the cheapest area, and that's what I found. I found very good deals. I bought several properties under $100,000, at the time. And, I actually did the BRRRR model without understanding what the BRRRR was. Mm-hmm. It was, I bought the cheapest property I could. I put some renovations into it. I refinanced them out. And back in 2006, 2007, banks were heavily incentivizing investors to purchase. So I was putting 5% down, 40-year AMs, and big five banks were basically pre-approving you. Mm-hmm. So you could get pretty much whatever you wanted, and I was. And then I was like renovating, refinancing, filling the units. And it worked very well until, the occupancy rate started to fall or the vacancy rate came up. And, the economy shifted a little bit. And then I was really stuck with some really rough houses in really rough areas. And, you can you can renovate the house next to the crack house all you want, but it's still next to the crack house, right?
Yeah.
And that's really what I had. I had some houses that I renovated relatively nicely, but I just couldn't keep good tenants in, and it cost me over the long run.
Yeah, the thing about what you're saying though, with regards to buying the cheapest house that you can find in like the worst neighborhood, I agree that that's not a good strategy to do for a long period of time. But I think in certain situations when you're just starting out, that might be your only option, and that's not necessarily a bad option. Like for me, the first 2 homes that I bought were not in good areas, and really, like, one of the first one was really run down, but I did pretty well with that. And then the second one, I did really well actually, and I bought it in a really terrible neighborhood in downtown Hamilton, and made like a decent amount of money. But I sold it within, I think, 2 years of owning it. So after that, I started, once I had a little bit of equity, a little bit of money to play with, I was able to buy kind of nicer.
Yeah, I don't disagree with you at all. I think if you're going to do that, and I know people that focus on that area, they buy houses in those types of areas, and as long as you're prepared to manage it, so it's like educating yourself, being prepared, having contingency plans, all those kinds of things, you could definitely make it work. What you don't want to be doing is a rookie going in there kind of eyes wide shut without being prepared. I was investing in London. I was living in Toronto. I was working the corporate world about 50, 60 hours a week, basically hands off, letting a property manager control these properties. They weren't doing a great job, which I don't even blame them. I blame myself for not being more aware of what was going on. And then therefore I got hit. But yeah, I definitely agree with you that if you manage it properly and you're prepared to manage that type of a property, you can do really well. Myself, it's not my kind of cup of tea. I'd rather go in some, B and A areas is what I prefer to focus on. Just makes the management a little bit easier.
Yeah, and it's really hard to maintain management on that type of property for a long period of time. Like you could do it for 2-3 years maybe, but if you're planning on like doing this as a career and being as a real estate investor for 20-30 years, you don't want to be managing the worst properties the entire time that you own it, or even having a property manager managing it. It's just going to be a headache.
Yeah, absolutely. The properties I have now and by the way, I still have a couple in London in the rougher areas, but I've had tenants there for like long term, and so they're a little bit easier to run. But the focus areas now are a little bit higher end areas where you get tenants in there that are easier to manage and take better care of the place.
Sure. So let's talk about now. So what kind of projects are you getting yourself into? What do you look for? What's your main strategy?
Yeah, so I will say about 5-6 years ago, I kind of switched my focus and kind of focused on the Niagara area, primarily in St. Catharines and Welland. A few years back, I was doing duplex conversions. So I was buying bungalows on the north end of St. Catharines and converting the main floor into a 3-bedroom, 1-bath, and then the basement into basically 2 bedrooms, 1-bath units. And it was working extremely well. I was able to do several of them. I think I did about 6 or 7 in the north part of St. Catharines. I was able to burr out my money. It worked really, really well over the last couple of years. Obviously, with the interest rates, the numbers don't really work very well on those, like to pull your money out. I still have those properties. They still perform decently, and they're great long-term assets to hold. But now I've kind of switched my focus into, I've done triplex conversions. So basically doing the same method, but just with a garden suite. And then I've gone a little bit further, and I've got a couple of projects going on now that are like larger than that. So I've got a 6-plex on the go as well.
Mm-hmm.
So
duplex conversions. So this would be around 2017 you started?
Yeah, that's exactly when I started, yeah.
2017, you bought these bungalows, added a second suite. Now it's pretty much the same thing, but you're adding a garden suite.
Adding a garden suite, yeah. So back in that time, if you go back, I was buying them around $400,000. Putting in $100,000 into the basement, refinancing them out at 6 to 7, and pulling all my money out. And it worked really well because I was also paying 2 to 3% on interest, and it just doesn't quite work that way anymore. I'm not able to pull out all my money on the conversions. I generally have to leave in some money, and it varies, like depending on how far you go. But you can buy the same house. It's $600,000 now, $600,000 for that type of property. And then you convert the garage as well, and you get another, $1,700, $1,800 a month in income from that. So it makes the project work. You do have to leave in a little bit of money though, which is fine. I think that we had a little bit of an anomaly there where it was really relatively easy to do a perfect BRRRR, and you can't do that anymore, or at least not as easily.
Yeah. So you've been investing for, like, say, somewhere around 17 years at this point. You've seen the market change and whatnot. Your strategy has changed.
Yes.
What are you aiming for today? Like, are you just trying to build up your portfolio to a certain level? Is it a cash flow goal? What are you looking to do?
Yeah, I actually left the corporate world about a year ago and to do the real estate full time. And so I do have a goal. I want to build my portfolio a little bit more, but I also want to get into some bigger units. I mentioned earlier I'm developing a sixplex right now, and that sixplex is on a parcel of land that has some future development opportunities as well. I love the duplex triplex conversion. I feel I'm really good at it. I've done it really well. I've got a number of joint venture partners that are extremely happy. I have some room to grow in that aspect. I want to continue down that. But at some point in time, having 20, 30, 40 properties gets a lot to manage. And that's why I want to get into some of the larger projects, which are a lot of fun as well.
Mm-hmm. And just kind of specifically, are you just looking to replace your income with these properties, or is it just to leave something behind?
Yeah, obviously I have to replace that income. I work with a lot of people and talk to a lot of people that are, if you will, younger and newer in the real estate industry that, want to leave their jobs, and they're relatively early in their careers. I was pretty established in my career. I'd been doing it a long time. I had a relatively, in perspective, a good income in the corporate world. But I've also built up a portfolio now of quite a few properties, at least for me, it was quite a few properties, close to 20 properties, that, kind of covers a lot of the day-to-day expenses. So now I really enjoy what I do. I actually like the involvement. I would love for, family to get involved in it a little bit more and leave something behind for them. So, I'm doing it out of really enjoyment. And don't get me wrong, I want to continue to grow my wealth and all that kind of stuff. But, giving back and doing this for enjoyment is a big part of what I'm doing now.
Mm-hmm.
Yeah.
Cool. Let's dive into that sixplex a little bit.
Yeah, absolutely.
So tell me about that. What was the original plan? Were you always doing a sixplex?
No, this was probably the most shifts, pivots that I've ever had to deal with in the market. So I started looking, if I go back to 2020 is when I bought this property. 2021, sorry, I bought this property. I was looking for duplex and triplex conversions. And what was happening was the market was so hot that, a property would come onto the market on a Wednesday or Thursday. I would go in on the weekend. I would go take a look, and there'd be like a pile of business cards on the kitchen table. There's like already 30, 40 showings. By the time Monday they were holding offers, there's like 25, 30 offers on these properties. And they were just getting out of hand. Like it was that even at a 2% interest rate, the numbers weren't working. So I kind of shifted my focus, and I tried to find something that everyone else wasn't focused on. And one of those areas was some smaller commercial units. And this house that I found was actually, it's a 2.5-story Victorian home, downtown St. Catharines. It was an accountant's office. And through COVID, they ended up working from home. And so this accountant's office was on the market, and it was going for less than a bungalow was going for. It just, they had it on the market. It was on the market for like 100 days. They had no offers on it, very little showings. No one was looking for commercial space. So I went and looked at that and thought about how I could manipulate that, and ended up partnering with a friend of mine who's also in the business. And we were going to convert it to a fourplex. But at the time we did that, again, interest rates were, under 3%. We were looking at doing about $250,000 worth of renovations. We expected the market to relatively continue the way it was going, and we were going to be able to pull out most of our money and have a fourplex. And then the first shift happened is we had to get an environmental assessment done on the property. And sure enough, they found contaminated soil.
Did you do that before taking possession?
No, we did that because we tried to change the zoning. So that's a heads up for somebody, that's getting into this. So it was on a mixed use zoning area. If we would have kept a commercial unit as one of the 4, we wouldn't have had to do the environmental assessment. But because we wanted to change all units to 100% residential, the city asked us to do a phase 1 environmental, which triggered then phase 2, and then they found the contaminated soil.
So this property did it have a residential component already, or it was just pure commercial?
It was pure commercial in a mixed use zone.
Yeah.
So if we would have just kept one of the units as commercial, we would have been able to avoid that situation. So huge learning curve for experience for me of, if you don't have to change a zoning, if there's a way to manage that, you probably might, don't do it. Right. Mm-hmm. But we did it. And ultimately in the long game or long scheme, I want to develop the back, which would have had to have an environmental anyway. So I kind of expedited it. I did it at the front rather than after I converted it. But anyway, so from that point though, when interest rates rose, the fourplex and the conversion and the remediation of the contaminated soil and all that didn't really work anymore. We had to leave in much too much money. So we went back and we kind of redid our drawings and we came up with a 5-plex idea and presented that to the city. And the city was for it, but they wanted us to put back in a commercial unit. So if we were going to add units, they wanted a commercial element to it, which then CMHC came back and said, well, we have no issues with you having a commercial as long as you have 5 units. So it ended up going from a 4-plex to a 6-plex, which is where it's at right now.
Mm. Just to go back for a second, the remediation.
Yes.
For the people that are listening, if you have contaminated soil, so this is, how big was the plot of land?
When it comes to qualification for a new property purchase, it's not always about saving up the most amount of down payment. Sometimes it's important to take a look at where you can allocate your funds. For example, if you're someone who has high debt load, it might be worth a while to allocate some of the down payment funds towards paying off the debt. Now, it may not always be the case that paying off debt is the best case scenario. However, it's about finding that balance so you can maximize your mortgage qualification. I would love to connect with you for all your mortgage related questions. You can reach me at 647-961-3281, or you can find me on Instagram and Facebook at The Mortgage Dawn.
The lot itself is about 40 feet wide by 256 feet deep.
Okay, so it's a pretty big piece of land. Was the contamination throughout, you had to replace all the soil, or?
No, the contamination was very limited. It was actually, it's over a century old, the home, and it used to be heated with a coal stove. So what they did is, for probably 20, 30, 40, 50 years, as they cleaned out the stove every year or every month, I don't know how often you have to clean out coal stoves, they put the ashes in the backyard. And it was in a very select area. But after, that period of time, as that starts to break down, it releases some chemicals which cause some problems. So actually arsenic was the primary thing. So we had to go, it was like 1.2 meters down to 1.75 meters down. And it was in maybe a 20 by 20 foot space. Mm-hmm. So we had to pull out, it literally was 7 dump trucks worth of contaminated soil. And but in order to get that far, what they had to do, the phase 2, is they dug boreholes and they tested the water and all that. And then phase 2 identified exactly where the contaminated soil was. And then the phase 3 is when we dug that out and replaced it with clean fill. So it was an expensive process. Probably it was over $50,000. More painful than that, though, was the time it took. So that process from start to finish was almost 2 years.
Wow.
Yeah, that was really the painful. We wanted to get.
Why did it take so long?
It was, phase 1, and then took 4 to 6 or 8 weeks, let's say, and then finding a company to manage the phase 2, do the testing, then they send away the samples to a lab. The lab comes back. You have to submit. I think there was a little bit on our side where we probably didn't get a company that had the same sense of urgency we had as well. So they were very slow, used to dealing with larger development projects. And, we were bleeding money monthly, and they were taking their time, and it was a little bit painful. But yeah, that process in total took almost 2 years, which was very hard to deal with.
What did you do with the property while all this was happening? Did it just sit vacant?
Yeah, and this is where I'll say, here's another learning curve. I could almost like, this is everything to not do, right? So I had several projects going on at the time when I bought this property. We had bought it, taken possession. We kind of had our plans drawn. We already showed the city. Everything was going well. We just didn't expect the environmental to come back positive. And so during a quiet week, I had my team go in there and demo the place. So they demoed it, and then, literally 2 or 3 weeks later, we found out it was contaminated. So it was like, stop everything. If I could go back, I definitely would have waited until I got the results of that environmental. I probably could have rented it out as a commercial unit for the next 1 or 2 years. Might not have covered all my costs, but it would have covered a lot of them. And then it wouldn't have been as hard to carry. So that was another definite learning curve for me, for sure. There was a lot in this project.
Yeah, well, it's kind of tough in that situation because, well, like you said, you don't expect the phase 1 to come back the way it did. And then you're trying to just kind of get ahead by starting the demo so you can do this project as quickly as possible, and it's understandable.
Yeah, absolutely. Absolutely.
Yeah. So at this point, where are you at?
So I'm now in the process of buying my partner out, and it's very amicable. We're actually getting along. He's still involved in the project, but this really wasn't what he signed up for a 6-plex, that took 3 years. So he's decided to focus his efforts elsewhere. And so I'm in the process of buying him out. And I've redesigned the building to become a 6-plex. The renovations are a little bit more extensive just because it's a 2.5 story and I have to add dormers to the top level. So it's a little bit more expensive.
Are you keeping the existing structure?
I'm keeping the existing structure. Yep, absolutely. I'm putting a 2-bedroom in the basement and basically a 1-bedroom and studio on the top or next 2 levels, and then a 1-bedroom on the top, which I have to add the dormer to. So it's gone from $250,000 renovation to probably around $500,000 renovation.
Mm-hmm. You're gonna probably have to waterproof.
Gonna have to waterproof it. Have to do it from the interior side, which is fine. There's room in the basement to add a sump pump and the interior waterproofing.
Does it have the ceiling height in the basement?
Tons of ceiling height. Yeah, it's like 7'8" or something like that. So yeah, lots of ceiling height there. So really looking forward to that side of it. The other process that we have to go through is we had to hire an energy consultant because to refinance out under the MLI Select program, I have to hit a certain number of points and I have to make sure it's properly energy efficient. So one of the requirements is you hire a third-party energy consultant, which reviews and works with us on the drawings to make sure that we hit those components.
Mm-hmm.
So
cool.
Yeah.
All right. So did you start the construction at this point or?
No, plans have been submitted to the city. We're actually just getting our final modeling done from the energy consultant. My goal is really to, have a final go ahead by early October to mid-October, and we can start construction. So I've already finalized my contractors and all that. They've seen the plans and everything. So now I'm just chomping at the bit to get going on this one.
Mm-hmm. And when you're done with this and you refi, do you think you'll be able to take out most of the money you put in?
Yeah, I've done the modeling, knowing what the rent rates are, and that I'll hit 100 points. I'll be able to take out. I'm leaving myself a contingency, so I can leave in, up to $250,000. But I actually think, it'll be somewhere between a perfect burr and leaving in $100,000.
Oh, nice.
Yeah, it'll be, and then it cash flows very well. Of course, with the MLI Select, I'm able to amortize that over 50 years.
Yeah, very cool. Because you're going to meet the energy requirements and all that. So for those that don't know, the MLI Select program comes in there's different stages, I guess you can call it.
Absolutely.
And if you meet all their criteria for energy efficiency or affordable units, depending on what you're going for, then you can go up to a 50-year amortization.
Yeah, as long as it hits the debt service ratio that they need. So they kind of allow you up to that as long as it hits that ratio, which is where I'm looking at. Yeah.
Cool. The commercial unit, is it going to stay where it is, or do you have to modify it?
I have to modify it. I have to do a few other things, just in the design of it, have to have sprinkler system in it and different fire separation and everything. But it's going to be a smaller commercial unit. It's going to be an office in the back of the building. So yeah, it was relatively easy to manage. I'm much more comfortable with residential. I would have preferred to just make a 6-unit residential, but I had to appease all players. So I had to do what I could to make it work for CMHC, and I had to do what I could do to make it work for the city. So I want to make everybody all happy. So that's why I've kept it as a office in the back. Yeah.
Cool. Aside from that, are you working on any other projects at this time?
Yeah, I've just finished up a couple. So I just finished up 2. I did 1 duplex, which was in a semi-detached home that I finished and refinanced, and I just finished 1 triplex, which was a up and down bungalow with a garden suite, and I just finished that project. And I actually just took possession of another project, up and down. It'll be an up and down bungalow with a garden suite as well. So continuing down that path, as much as I love the larger projects, I really do feel like my wheelhouse is that bungalow with a detached garage is where I'm really proficient at. Yeah.
What challenges did you come across with your latest bungalow with the garden suite?
So there's actually, it's a really good question, because there's been some changes to the regulations in Welland. So my first couple of garden suites, I was able to tie in the water and sewage into the house. And Welland, I don't know if the bylaw changed or they just enforced it, but you now have to tie into the main, or at least you have to tie in front of the house. So it adds, in my case, like 80 feet of digging a trench and running a water and sewage line. In my previous ones, I just tie right into the house, which was like 20 feet away. So that is one of the changes. I did know that going in. I talked to my architect, and they let me know what the city was doing. And so I was able to budget that in. But yeah, that makes a little bit more of a challenge. I mean, you add somewhere between $10,000 and $20,000 to your budget. So as long as you're budgeting for that, you're okay. The other thing was, I was hoping they were going to accept the framing and insulation in the basement, and the city did not. So I have to pull out perfectly good insulation. There was no vapor barrier behind it, and redo that. So
so you got to rip out all the drywall.
It wasn't drywalled. It was just framed, insulated, and a vapor barrier. So I just have to pull it down and vapor barrier it, or put Tyvek in behind it and re-insulate it, and then put a vapor barrier.
That doesn't sound too bad, because it's all exposed.
Yeah, and those types of things, those will never. I mean, as long as you budget properly, that's not going to throw the deal off. You're trying to cut costs where you can, while continuing with good quality. The other thing I did on this latest project is I had an energy audit done on the property. So, with adding heat pumps and insulation both in the attic and the basement, I'm going to get some rebates there.
Oh yeah, cool. Yeah. What have you been able to do to cut costs on these projects, on these conversions and garden suites, that maybe people aren't aware of? Just maybe some tips that you can share. Yeah,
there's a few. I'll say one of the things I did earlier on in my conversion kind of journey, I think I would over renovate the properties. And, I love the open concept. So you get this like 1,000 to 1,200 square foot bungalow. The ones I look at are generally 50 to 60 years old, and they're compartmentalized up top. So I was ripping out walls, putting in LVL beams, making an open concept everywhere. And, at the end of the day, I'd spend an extra $10,000 to $20,000 to do this, and I really wasn't getting any more rent. And now I look for properties where I have to do minimal amount of construction. And I like getting the main floor done right away and then being able to rent that out. And as long as you talk to your tenants and your potential tenants and let them know, for the first couple months, there's going to be some construction, and then work out a deal with them. I give them like a 3 months rent to move in early or something like that. And then they have to deal with some construction just from 8 a.m. till 3 or 4 p.m. And then they can move in. That helps cover a lot of the carrying costs. So if you can get, $2,000 to $2,200 a month upstairs during that renovation time, it helps with a lot of the costs. And then again, I might do floors and paint or whatnot, but I don't always pull out the kitchens and do open concepts and all that. It's a little bit of an overkill. You don't really get that much more in rent for it. So I just kind of manage my budget that way. Now I have worked with quite a few contractors over the last 5-6 years. I've gone through probably 4 or 5, and I'm really working with some contractors now that understand what my needs are and my goals and the timelines. So you really got to pay attention to that, because that's where some costs can escalate if you don't have the right contractor on side.
Sure. So the tip about renting the upper level while you're working on the lower level, that's really good. I know it's a bit inconvenient, but the tenant might get a bit of a discount or whatever to make up for it. Aside from that, you're also a coach.
Yes.
So let's dive into coaching a little bit.
Yeah, absolutely. You know, I talked about my journey and when I started in 2006, and I honestly think back to that and how much better off I'd be if I had a coach at the time. You know, I had read a couple of books, which were great books, but like Rich Dad, Poor Dad doesn't teach you how to like manage residential real estate in London, Ontario. So I really would have benefited from a coach. So about 3 years ago, I wanted to take some coaching myself. I was doing quite well, but I wasn't able to scale at the level I wanted to. So I did a lot of research, and I ended up finding the Infinite Real Estate Results program with Cory McKinnon. And I signed on, and I was coaching under him, and I actually still am. I still get coaching from Cory. And, you know, I did that for quite a while, and just over a year. And over that period, I talked to Cory about, you know, I'd love to be able to support this program and give a little back. And so for about the past year, I've been coaching some students, and not too many. It's more of a passion project, really helping out students as they get involved into the real estate game. I've got a few that are a little bit more senior that have done a few properties, but it's really working with these students and the whole community on, you know, not making those mistakes, doing the proper research, having your due diligence, understanding your numbers, all that kind of stuff. So I you know, it's a passion of mine to help out these people. I do love the real estate business, and I love helping people walk through this so they don't have a 10-year recovery and all that kind of thing on their hands. So
just so I understand a little bit about like the whole Cory's coaching system. So you get assigned a student, and then are you doing weekly calls, bi-weekly?
Yeah, so the program itself, we have, you know, a weekly session with everybody involved. Obviously, it's through Zoom. We get everybody together. We'll have different keynote speakers, legal, mortgage brokers, you know, all the realtors, all the, you know, developers, all that type of people that come in and speak to us on a weekly basis. We also have quarterly events where we'll have, you know, keynote speakers. It'll be a 2-day event at, you know, at a hall or whatever. And then from the individual standpoint, we take on these students. We have a weekly call with the students. We have, you know, quarterly sessions with the students as well. And then, you know, I'll say there's a weekly call, but which is true. Like, that's kind of booked in your calendar. As these students are developing their business or looking at a property or buying a property, you know, you're working with them pretty intently to go through the numbers, make sure they've got all their due diligence down. You know, I've been out to many properties with students, looking at the houses themselves, making sure it aligns with what their goals are and everything. So I really enjoy it. I really like seeing the successes that the students have and being able to work with them through these things and helping them kind of build their power team and setting themselves up for success going forward. So
cool.
Something I love doing.
Yeah. Very cool. Coach is really important. I've talked about it many times. I've had coach in the past, and really helped accelerate my career as an investor. So I can see how that would be really helpful to a lot of people. Maybe to finish things off, do you feel like there's anything we missed? Anything you want to touch on?
No, I think we've covered it really well. The one thing I will say to a lot of people out there, you know, these are tough times right now. The interest rates have gone up enormously. I learned a lot of lessons through my past, but I didn't learn them all. I could have been better prepared. So the one thing that I got stuck with back in, you know, 2010, 2012, I had to sell off properties in order to keep myself afloat. I came very close to bankruptcy. So you really want to just pay attention as much as you can to your properties, how you can maximize the cash flow or minimize the pain if you're underwater a little bit. And if you can hold on through this, things will get better, right? Like, interest rates are very high. They're not, you know, they might go up even more in the upcoming months, but eventually they're going to come back down. I don't think we're going to see a 1 or a 2 in front of that number anytime soon, but they will come down from where they are today. So just make sure you manage your property best you can. Take advantage of all the tools that you're in your toolbox, and make it through this.
Mm-hmm.
Yeah.
Absolutely, yeah. I think that's really good for you to say, and I think people need to hear that, because I'm sure there are people that are probably close to bankruptcy or dealing with really depleted cash flow and that sort of thing, but just find a way to make it. If you got to sell off a couple properties, sell them off.
Yeah, do what you can to stabilize your portfolio, but also look at your individual properties and make sure you're maximizing everything. You're minimizing the costs and maximizing the revenue on every individual property. You have to pay really close attention to it, especially right now.
Yeah. Good advice. To finish things off, how do people reach you, and what services are you offering? Although you kind of already covered.
Yeah. I'm part of the coaching program. The best way to reach me is probably through Instagram. I don't have a marketing specialty, so I'm Cory Froc Investments. I got to come up with something better than that. But easy way to reach me is through there.
All right. Perfect. Cory, I appreciate you coming out, driving out here and doing this in person, and I look forward to staying in touch.
Thanks so much. Appreciate it.
Thanks for listening to this episode of the Well Off Podcast. If you enjoy the show, then I'd really appreciate if you left us a review on iTunes and let us know your thoughts. In order for us to get a larger audience, it's really important to have reviews, so your support is extremely appreciated. And also, don't forget to share the podcast with your friends and family. Until next time, I'm George Almasri. Have a great day.